Hey there, this is Christian from Tribeca Trade Group with your end of day recap, and this is going to be a quick one because I got to run out the door. But pretty choppy, another choppy day in the U.S. markets. We started the day higher, which I I understood because Europe was up this morning, but I just didn't think that we were going to hold the gains today. There's too many negative things that were happening today. So we didn't break either. If you look at where the S&P is, this is kind of what I've been saying all week long. So if you've been listening to me about this, I apologize. But when we start but I'm just going to repeat myself here for a second. When we start the week in value, it becomes very difficult for us to break out one way or another. So we haven't done it yet. Maybe we do it on Friday, but this is why I talked about selling an iron condor this week in the S&P because we really are exactly where we started on Monday. It's almost Friday. We've had a couple different market events. We've had a lot of earnings come out this week. We have the jobs data that comes out tomorrow. So this was Monday. We could not break out. This was on Wednesday. We could not break below. We tried pre-market, could not break up. So back and forth like a pinball. And then actually at one point, 11 o'clock this morning, it looked like we were going to break down, and you could see this 1 hour bar never even closed below value, and we're sitting right back at the point of control. It just looks like there's just not a lot of oomph. And you look at again, there was a lot of bad things that went on today, much more so than good. But I think a lot of the bad things, if you look at the how the index is weighted in the SPX, you'll find that a lot of the bad things that are happening are not big weights. So, for example, we'll start with oil, which we've known about for a while, but just getting crushed. All the commodities basically got crushed. This is now outside of range from where we are, so maybe a little bit of support here, but we're really pushing to the downside. And you look at how energy companies finished. They finished off the lows. I saw XOP, which is the Explorers and Producers ETF, was down at one point around like 4.5% on the day, so it did hang in there. It does look, at this point, below the 200-day moving average. You want to take a look at some of these things on the weekly chart. But I didn't go ahead and short XOP. We had talked about this in the trading room. I think a couple people did on this retest of the 200-day moving average, but really nice short setup for XOP. And I talked about this in last night's video, talking about how I think you have the ability to short things. Really when for the most part, for the last 4 months, I've been pretty bullish. I haven't really had many bearish plays on. I've either, when I think we get a little bit overbought, I sell upside call spreads, but I really haven't been buying too many puts at all. But certainly you have the opportunity now that we see this is XME, this is metals and mining. Just looking at copper. Copper actually came back a little bit today. It was also down well over 2%, so still finished down 1% on the day. Really, if you look at, I think I still have a chart up of iron ore. Yeah, I mean, look at iron ore now down. I've been talking about this at nauseum, but it continues to go down. And depending on what exchange, I mean, that's really ugly looking. Double top in iron ore and a straight move down here. So what's this move from high to low? I mean, this is no small move at this point. This is about a 40% move from high to low, and basically in just about 2 months. So really a big move down here. You could see also the retest of the 200-day moving average and a fail. So I really don't. I know some people have been looking for like little bounces in some of the steel names. For day trades, sure, if you want to give things a shot for day trade, but for swing trades, I don't want to be involved in anything in this group right now, unless things get back above the 200-day moving average. So XME, if you look at this ETF, which is half metals, half mining, a lot of steel names in here, a lot of gold miners. You go to sorry, I'm trying to bring up the weekly chart. You look at the weekly chart. I said this morning. I put out a chart this morning saying, "Hey, I don't really want to short this thing until it gets below 28 bucks." I mean, I probably kept myself out of a good dollar move here, maybe a dollar and a half move as this thing gapped down lower this morning. So I don't think there was much to really do today, considering if you look at the 5-minute chart, we did gap lower and we did end up going lower, but then came back. So just like I mentioned, XOP finished off the lows as well, kind of similar looking bounce back at the end of the day. But I don't think these things are out of the woods yet. So again, small. The reason why you don't see the S&P finished up on the day, is because a lot of energy is what I think a 7% weight in the S&P. It's less than a 3% weight in IWM. So you're just really not seeing it because they're not big areas of the market. The big weightings of the S&P are financials, technology, healthcare, consumer discretionary, not energy, not metals and mining. So while you see a lot, could see a lot of red on your screen. You go back to so that's the bad in terms of areas that were up today. It was consumer staples. We really hit a couple really nice trades in the room today. We saw some Kraft Heinz calls go up, and on the right around the lows, and I started to see a nice green bar. They went up aggressively. Before we knew that, we've been all over this in the Tribeca trade room today, or the last week. We've been talking about packaged goods and how weak they've been. So all it took is a little bit of a rumor about General Mills, and I think a couple of traders put some General Mills calls on for like 30 cents, and they took them off for like $3 today. So we're on top of this stuff. That's what we're here for, to be on top of these trends. I mean, I even created a custom, since there's no packaged good ETF. You have consumer staples, but you don't have a packaged good ETF. And let's see if I can bring up my customized indices. So packaged goods, we were watching these things. You could see how I weighted this thing. It's an equally weighted basket of all the biggest packaged good names. So this is what I used to do in my trading days. Is I used to invent indices and customize ETFs back in the day. So you can see this thing really went hard the last, basically, if you just look at it like the last month, really dipped really hard below the 200-day moving average. And then today you see a huge bounce in this group. Again, sometimes when things get a little bit oversold, all it takes is a little bit of a rumor or a little bit of good news, and these things went flying. So that really kind of helped me out today, because I went long Kraft on that. A couple other trades. This is a name that I've been watching for a while. This name reported earnings. Right on the lows, there were some calls that were bought. So another really nice trade in the Tribeca trade room today. Again, this is a name that I've been watching for a while, and haven't had I've been just kind of sitting on the sidelines. I felt like I missed it a little bit in terms of this move up here, where you had the 100-day crossover, excuse me, the 50-day crossover, the 100-day and the 200-day. So I've been watching Realogy for a while, and I'm still in this. I took about half the position off. Maybe it gets a little bit of a bid tomorrow. Zillow's up really nicely after hours. So what else? What else went on today? Gold is continuing to crumble as well. So both gold and silver. We're going to see, if you're on Twitter, you're going to hear more and more of the how many consecutive days silver's been down. But it's just an all-out move down here. And someone asked me this yesterday. They said, "Oh, is it the strong dollar? Is that what's causing this?" I'm like, no. The dollar is like getting crushed. So it had one day of gains yesterday, and I was watching this right around the 200-day moving average. It looks like it was holding, but it has nothing to do with the dollar. The dollar is not strong. It has to do with the fact that they are going to push ahead and raise interest rates. That's my explanation for gold. I don't really have an explanation other than I don't think it's the weak dollar that's it's usually the strong dollar that causes commodities to go down. The copper and the iron ore is more China related. There is thinking that they've got a little weakness. They have they've had some data that's come out this week that's been a little bit light, but I think people are expecting, I don't know, some more weakness coming out of there. The manufacturing data that they have that has been coming out has been a little bit light. The Caxton survey, but not bombs of numbers. It's basically just a little bit light. So Last night, so just coming up, just things to kind of watch. There's a couple other trades that we looked at today as well. There's been repeat Nokia calls. There's been repeat ETFC calls. Bud, huge winner. I did not take this trade. Somebody actually tried to tell me a couple months ago on Twitter that I was wrong when there was a bunch of Bud calls. They're like, "Oh, those are cross versus stock." Yeah, I don't think so. You look at the price action in Bud. Even if they are cross, somebody's speculating on the upside, but just a straight upward move in Bud. So we saw that a couple traders in the room actually did take that trade from a couple weeks ago where they went long Bud. So congratulations to them for taking that trade. So really nice there. And then finally, I'll kind of leave with, even though we have the French vote, which Le Pen, not Le Pen, Macron seemed like sorry, I can't speak. It seems like he won hands down the debate. However, don't count your chickens until this thing is over with. Europe is beasting out of control here. Really, really big move up. This is something that I've had long on for a while now. Um, and you could see there's been just crazy inflows. I don't have my spreadsheet up, but I think it was $322 million of inflows going into Germany between two different ETFs, and a lot of money going into Europe through the EasyU ETF as well. Also, EUFN, which is European Financials, they're all seeing inflows. Just be a little bit careful carrying risk into this weekend, considering that no one is. I always get worried when no one is expecting something. Hence, this election that's coming up this weekend, and then also we have the jobs number tomorrow. So perhaps maybe the market moves a little bit tomorrow after the jobs number, but I don't think it's going to be a crazy, crazy move considering we still have this. I think people are still going to play this to the conservative side in terms of whether or not putting on major risk on Friday. So that's it. The last thing I will say is, I monitor the fund flows every day. Just like I was saying with Europe, there's been a lot of money that's been going also into emerging markets and emerging markets in Europe, and no money has been going into. There's actually net outflows in the U.S. I think it's around $5 billion of outflows. I have to double check it for the week in the U.S. So money's not going has while there was big inflows last week into U.S. equities, this week it's been nothing. There's been outflows, and then there was just one other trade that we caught here. I am long EEM, so I have to think about what they're thinking here. EEM, I don't think there's anything really wrong with the chart. Maybe watch the 50-day moving average, but there was a lot of EEM puts, the June 40s and the June 39s. There was a total of 129,000 June 40 puts that went up today. So that is no small trade. That is, I believe, an $11 million trade for puts. It wasn't labeled as a spread or anything like that. So as far as I could see, it looked like an $11 million bearish bet on emerging markets. So be a little careful. I didn't unwind just because I see one trade on the tape. I'm not going to unwind it. I'm going to let the technicals and my trading system get me out of a trade. So for me, it's the 50-day moving average in EEM. But just be aware of that large trade on the tape. Thanks very much for watching and have a great evening.